A decade ago, sending money abroad used to take weeks and cost a small fortune. Then, one company changed everything. Today, we're taking a look at the extraordinary story of Ripple, a company that's revolutionized how the world moves money and is now valued at a staggering $40 billion. So, how did a small startup turn into a massive fintech giant? Let's find out. Believe it or not, but just 100 years ago, sending money used to involve telegraph machines and the Morse code. Western Union, established in 1851, pioneered this service, letting people send wired money messages across cities and countries. As global trade and migration grew, so did demand for quicker and safer solutions. In 1973, several international banks came together to create a messaging network called SWIFT, which became the bedrock of money transfers across the world. The name SWIFT was ironic, because the system used to take days and cost a small fortune. SWIFT didn't actually transfer money. Instead, it simply told banks how to settle amounts owed. Transactions still involved multiple correspondent banks, each charging fees and taking time. In the late 90s, new players like MoneyGram, PayPal, and Wise began to use technology to speed things up and lower costs. But money transfer was still largely bureaucratic, slow, and expensive. Then, in 2008, Bitcoin exploded onto the scene. It was a revolutionary idea, a currency that used a distributed ledger called blockchain, secured by a network of computers that did not need any central oversight or governing authority. Suddenly, financial transactions could happen without the need for banks. While the world was obsessing over Bitcoin's potential, Ripple's founders, Chris Larsen and Jed McCaleb, realized that instead of trying to replace banks completely, they could work with them to design a cryptocurrency that would make their processes faster, cheaper, and more efficient. Thus was born the XRP ledger and a digital currency called XRP. Ripple's XRP ledger was a digital record-keeping system that everyone trusted and could check in real time. The money that was being moved on this ledger was XRP, a digital cryptocurrency that lives on the internet and moves almost instantly. Sounds a lot like Bitcoin, right? But there's a big difference. Bitcoin was designed to be a store of value and a way for people to own decentralized money. To do this, Bitcoin uses a process called mining, where powerful computers solve tough math problems to confirm transactions. This takes time, usually about 10 minutes per transaction, and a lot of electricity. XRP uses a system where a small group of trusted validators quickly agree on which transactions are valid, allowing payments to settle in just 3 to 5 seconds. Imagine that you want to send money to your friend in Paris. In the SWIFT system, your money goes through a chain of banks, each taking a cut and holding up the payment. It would take about 3 to 5 business days and cost nearly 7% of the transaction value. With Ripple, you could simply swap your dollars with XRP and then swap the XRP back for euros on the other side, all for about 60% lower cost and in just a few seconds. After Bitcoin's initial buzz died down, many crypto projects lost out because they were chasing retail hype. Ripple smartly focused on building relationships with banks and financial institutions under the umbrella called RippleNet. Their products helped banks settle payments instantly, use XRP to boost liquidity, and track transactions in real time. By 2020, over 300 banks and financial firms were trialing RippleNet, signaling strong early adoption in a notoriously slow-moving sector. The banking industry was starting to wake up to the idea that there's a smarter way to do international money transfers. What happened next was something no one could have predicted. But before we go there, if you've liked the video so far, please like, share, and subscribe to our channel to get more such business breakdowns in your feed. Alright, back to the story. All of Ripple's dramatic success hit a roadblock in December 2020 when the SEC filed a lawsuit against it. They claimed that XRP was an unregistered security, meaning Ripple had conducted an illegal securities offering of $1.3 billion. The lawsuit spooked markets, dropped the price of XRP, and put a cloud over Ripple's prospects. The crypto world watched nervously as a decade of work was thrown into doubt. But Ripple fought back aggressively. Their defense was that XRP is a currency, not a security. A fundamental distinction with huge implications. The case rolled on through the next few years with multiple motions, hearings, and insider revelations that questioned the SEC's approach to regulating crypto. Their persistence paid off in August 2025, when the courts ruled largely in favor of Ripple, requiring the SEC to drop key allegations. Ripple agreed to a $125 million settlement, but was cleared of all the regulatory uncertainty that had loomed over it like a dark cloud. While the legal battle was fading, Ripple was doubling down on growth. They expanded their product range, introducing stablecoins, digital coins pegged to real-world currencies, making transactions even more stable and reliable. They introduced new treasury and custody services aimed at corporate clients wanting to hold, send, and manage digital assets securely. They also expanded aggressively into emerging markets in Asia, Latin America, and the Middle East, where cross-border transactions were frequent, but traditional banking infrastructure is lagging. As they grew, so did their reputation. More and more institutions joined Ripple's network. By mid-2025, Ripple was working with major banks like Santander and Standard Chartered. It was no longer a startup with a crazy idea, but a global fintech powerhouse. Back to today, November 2025, and Ripple has announced that it has raised $500 million in new funding, pushing its valuation to an eye-watering $40 billion. Investors like Fortress, Citadel, and Galaxy Digital have poured in money because they see the potential. Consider the growth story. In 2020, Ripple was valued at just about $10 billion. In 2023, amid all the legal uncertainty, its valuation was only about $15 billion. But just 2 years later, Ripple has become one of the largest and fastest-growing fintech firms in the world. It's a testament to how far it has come. But let's not get ahead of ourselves. Ripple still faces fierce competition from traditional giants like Swift, the old message system that handles 90% of all global money transfers, and newer blockchain rivals like Stellar and Solana, who tout decentralized ecosystems. But Ripple's genius is in partnering with banks rather than fighting them. Their tech makes banks faster and cheaper without displacing them. They're also exploring new territory, like digital currencies issued by central banks, to make the world's money system even more seamless. With CEO Brad Garlinghouse leading the charge, Ripple's story is just beginning. So, will Ripple become the big daddy of money transfers? Only time will tell. But for now, it's time for Ripple to take a bow. If you found this story fascinating, hit like, comment your thoughts, and subscribe for more such content.